Hey everyone, this is Kirk here again at OptionAlpha.com. Welcome back to the video trading recap that we do here each and every night. And boy, did we have a really busy day today. As you can see, we had a lot of trades that we took off as we got closer to February expiration, and then also rolled a contract and entered some new trades for April and then for March as well. So I want to get to those here in a second, but I do want to show you guys what our profit loss diagram looks like on Twitter right now. And the reason I want to show you this is because Twitter, we've had a ton of adjustments through earnings and everything that's happened with Twitter. And it's just really crazy because Twitter is trading right now at 55.44, and that's where it closed today. And you'll notice, and even if you go back to some of the video tutorials that we had posted before, is that we had this kind of sweet spot between 54 and 55 where actually if Twitter closed between those barriers, we actually could turn a profit on this thing and turn what would have been a huge loss on the Twitter side into possibly a nice small profit. And it's interesting because just the other day, Twitter was up at 58. So that would have been about $1,000 loss had we closed everything out around that time period. And now Twitter's come back down just in the last day or so. So again, it really drives home the point that you've got to hold some of these positions all the way to expiration. And this one is one of those ones that we would typically start rolling off at this point, but tomorrow's really the last day we can trade these contracts. And that's what we're going to try to do is try to hold out as much as we can tomorrow and see if Twitter can't trade right inside that range. So we've got a little bit of margin for error here, but again, that's what this whole business is all about, is letting the market cyclicality play out. And what would have been a $1,000 loss is now a little over a $400 loss right now, and possibly is going to turn into a nice profit tomorrow. So as always, we'll keep you guys informed on this trade, send out any trading alerts we have, but this is just a really interesting show here of what happens when you just kind of hold a position, kind of let the market work itself out with cyclicality, and give positions a chance to make you some money. All right, so let's go to the trades today. I am so sorry that I forgot to include last night in the recap video from Valentine's Day trades, this trade in SLV. I know everyone, I guess, got into it and is interested in it. So let's go over that one real quick. It was SLV. It was an April option trade, so we actually moved beyond March and went to April and bought the 22.19 put spread for $1.60. So a little over the mid-price difference between the strikes. The difference between the strikes is about $3, and we paid $1.50 for that trade. So that's how we got to that price point. We like to pay about $1.50, paid a little bit over that for silver. Now here's the deal with silver. Silver has rallied up tremendously over the past couple of days. And let me go to a chart here of silver so you guys can take a look at it. But silver's really been on a tear, and then today it continued to move down. So really what we want is somewhere around 22.5 is where, or 20.5 is really kind of where we're breaking even on this trade. And so we want silver to obviously move down below that level, but really at this point we're just playing the statistical odds that after this type of a move higher, that there's a good chance at some point it's going to move down below this level between now and April expiration. So we've given ourselves a lot of time to be right on this trade, and that's really what we want to do, is give ourselves a lot of duration on these directional trades, and as soon as we start to see a profit, we'll take that profit right off the table. All right, some of the opening trades that we had here today. XLU was another big one. We bought the 42.40 debit put spread. Again, the difference in strikes is 2, and we paid a little bit over what we wanted to pay for that, but that's just about how it turned out. So we didn't leave too much room for profit, so we'll probably take this one off fairly early in the cycle. But really the whole idea here with XLU kind of went outside the barriers of what we were trying to do. But you can see just the huge run up that the stock has had in the last month and a half. And look, the reality is that it's due for some sort of a pullback here before March. And so we're already starting to see that, but we want to see it just a little bit more, and then we'll start to take profits on this trade. But already looking like a very nice trade setup right now. The next one that we traded today was IBM. This was March contracts, so again, moving out to the next contract month as we start to roll off February. We bought the 190-180 put spread and paid right about mid-price for that. Mid-price around that is about 500 of where we're trying to play this. So that puts our break-even price right around 185. And the same deal with IBM as with XLU is that IBM is just really overbought right now, and you can see it's running on a pretty massive streak of wins. So I think it's about 8 or 9 days in a row that the stock has been up. And again, all we want is the stock to close about anywhere below 185 between now and expiration. So you see we've already given ourselves plenty of wiggle room between this trade. This is basically a 50-50 shot in the dark, and keeping ourselves a little bit more delta neutral in our overall portfolio. This is obviously playing out really, really well. I'd love to see this get down towards our long strike or our short strike at 180. That'd be really, really great to get that stock all the way down there and have a nice little profit on our hands moving forward. All right, the next trade that we opened today that was technically an open but was actually a roll. So I want to go over this one in detail, and it's because Cisco is very, very close to being a winner or a loser here in February. So what we did is we rolled the February contracts over to March. And so that's what the Feb to March is here. So we kept our strikes exactly the same. And like I always talk about, we always want to roll an option strategy for credit. So in this case, we rolled it out to the 22-23 March call spread. And by doing that, we actually took in a small credit of 5 cents per spread on the roll. So basically paid for the commissions and then some to keep the trade alive. But you'll notice that our strikes at 22.23 is right on the dance floor of where Cisco is. It's at 22.28 today, and you'll notice that being at 22.28 is kind of right at that point where it could be a break even, could be a max winner, max loser. And I just don't want to take the chance of doing that a day before expiration, kind of rolling the dice here at the last moment. I'd rather give the stock a little bit more time to be right and be a little bit more negative in our overall assessment of Cisco and where it could go from here. So roll the contracts out to March, gives us a lot more time to let the trade develop into a nice big winner instead of rolling the dice here near expiration. All right, so moving on to the closing trades that we had today, and you can see we had a ton of closing trades today, some at losses, some at winners, all part of the game. First one is FXI. I'm going to go through this one pretty quick because these are pretty simple ones. We had originally sold a call spread or a credit spread in FXI, and that was the 33.32 put spread, and we bought that back today for an 8-cent debit, so took in $17 of profit per spread. It's actually a fairly simple trade. We have still 7 of those contracts that are working, so we only closed out 1 of the original 8. So a lot of you will notice that we still have a position in FXI. Just didn't get the fills on the rest of the 7 contracts today. Only 1 got through. So that was a little bit of a disappointment, but we'll continue to monitor that and try to close those back out here in the next couple days and kind of really unwind this whole position. UNG was another one that unfortunately turned into a loser here at the end of the month. So we actually bought that one back. That was the 25-26 call spread that we bought back for a 92-cent debit. Originally, this is, if it's a full max loss, we would have bought it back for $1. So we saved a little bit of money here before expiration, but again, took in a $67 loss per spread on the 6 spreads that we sold. So a little bit more of a loser, but we're trying to actively get back into a UNG short position. I still think this market is really, really crazy regardless of everything that everyone hears out there about supply levels and whatever. Implied volatility still remains really high on UNG. It's at the 55th percentile. We still see a lot of resistance up here around $27 for UNG. So what I want to do is reset the strikes instead of rolling out to the next month. So we're trying to reset the strikes. We had an order working today, but again, just didn't get the fills for the number of contracts that we were trading. All right, this one was a little bit of a bummer as well. This Dow butterfly, I thought this one was going to be a really, really good trade. It was a very even butterfly that we had originally bought and sold back today for a small credit, again, just to get something out of this trade, but took in a $36 loss on this. Our butterfly was centered around 44, and while we did see a nice drop in implied volatility for Dow, Dow's implied volatility came way down from where we originally entered this trade. I think it was up around the 60 or 75th percentile for implied volatility. So we did see the drop in implied volatility that we needed, but we just didn't see the actual action right around the 44 strike. We were there a couple times and didn't show a nice big profit. And so at this point, we're really close to expiration. I doubt that the Dow stock here is going to drop another $2.50 here in the next day. So again, save a little bit of what you can get out of it and just keep the position alive. There's no point in rolling this, obviously, because implied volatility isn't high enough to roll it to the next month, right? You wouldn't want to re-enter that trade right now in March. It just isn't a good trade. So at this point, take the loss and move on. All right, so Google, we unwound our last leg of the Google spread that we had here today, And this was the 1140, 1145 call. We bought it back at max loss. And so you see at this point, I don't have any problems ever saying that because we had a lot of profits this month. And so Google was not one of them. We had a lot of adjustments. We reduced our overall loss on Google dramatically by the adjustments that we made. And I want to go over that in a post in more detail on the blog here in the next couple of weeks. I'm going to kind of lay out all the adjustments that we made because I think it's a really good example of how to reduce a loss even when the stock moves against your earnings. But on this particular leg of the strategy, we actually took max loss on it, bought it back. It was a $434 loss per vertical that we bought back. All right, another profit that we took here before expiration. I thought this one was going to come down a little bit more, but just really didn't, but actually kind of finally came into its own here in the last couple of days before expiration, and that is that we sold back the debit put spread that we had in Bank of America. We had the 18-15 put spread, sold it back for $165, only made $15 on it per vertical spread that we had sold back. So again, it was a very even trade. It was a 50-50 bet that pretty much worked most of the month here. And you can see that just in the last couple of days, Bank of America has been really resilient to stay above the level it's at right now. So just in the last couple of days, it's kind of turned over and given us an opportunity to originally take what would have been a loss had we closed it out a little bit earlier in the week into a nice little small profit that basically covered commissions and then some. So the trade was pretty much a wash, but hey, we'll take it at the end of the month. All right, the next one that we closed out today was that we bought back XLE, the vertical put spreads that we had. This was a nice little trade. Originally sold the 80-79 put spread in XLE. Obviously, the rest of the market has continued higher along with energy, which is what XLE tracks. And so we bought back that credit spread for a 6-cent debit, took in a $19 profit overall. Really just a very basic, simple trade that we made here. Again, rolling the same or continuing with the same idea of taking profits at about half to 75% of max potential profit. So notice that these are March contracts, and I'm not going to let this thing stay on the books just for another 6 cents. I'm going to roll this contract off and take the profit. I'm not going to keep that potential to have a loss here for another 6 cents per contract. We've made the vast majority of what we can make on the strategy, $19 per contract. There's no point in holding this all the way through March. All right, and then the last one here today that we took off was the other half of LinkedIn. So LinkedIn was a very similar story to Google, and that's what I want to go over in another blog post in the future, so be on the lookout for that. But we took off the 205-200 put spread for a 470 debit, so very close to max loss, but it was a 330 loss per spread, so another one of these big losses that we had. But obviously we had made some adjustments in LinkedIn along the way to reduce the overall loss even after earnings. So at the end of the day, that's the positions that we have. So we're entering a lot of new positions for March and April expiration. Had a lot of contracts that were working today, so a lot of working orders, just not a lot of fills. So I do expect to get a lot more fills now that we have expiration kind of behind us tomorrow. Tomorrow will be the last day to kind of tidy up our portfolio with February expiration and continue on through March. So as always, if you guys have any questions at all, please add them to the comment section here below. I'll get back to all those questions tonight and tomorrow, and happy trading.